Hi, my name is Darren Joseph from HCJ.tax, a team that demystifies that sometimes confusing world of international tax. And HCJ.tax is a part of Moore's role in Asia Pacific, which has over 30 offices as far north as Tokyo and Beijing, all the way down to Auckland, New Zealand, and all the way across to the Gulf states, including Bahrain and the United Arab Emirates. So what I want to do now is share a clip from a recent Zoom webinar that we did as part of MARP. Take a look. Without further ado, I'd like to introduce another colleague who many of you would have met in Cambodia, Mikhail. Mikhail is, of course, a barrister who has been called to the bar of many of the jurisdictions, including most of the Caribbean, including the BVI, Eastern Caribbean, as well as the DIFC in the United Arab Emirates, as well as the other financial center that we discussed, the one in Kazakhstan as well. So, he has that range. Mikhail, over to you.
Thank you. Well, good morning, everyone. It's 6 o'clock in the morning here in London. Forgive the little frogs in my throat. I've had the benefit of listening to Aaron and to Paula, and essentially I don't propose to address anything that has already been addressed, apart from saying that when I prepared for this, I used a set of criteria for ranking offshore jurisdictions. I appreciate the Global Financial Centers Index, but essentially, people go offshore for many different things. Traditionally, they wanted total secrecy. That's now out of the door. What we now have, especially with the advent of Pillar 2, with the advent of the EU blacklisting regime in particular, is that the regulators essentially in England, they put it under the cosh. They really squeeze. It's the more sophisticated or the more nuanced client that really is looking to use or deploy an offshore structure. And those criteria that I use for the purpose of this morning's exercise are the following. What's the regulatory reputation, taxation and treaties, the compliance requirements, banking and service access? And I think that is the greatest issue. If you can't get a bank account, or if you can't get access to transfer funds or a payment system, or at least a way into the international transfer of funds, yes, you can use crypto, what have you, but you still need a structure that AML can pass AML CFT and won't get you red flagged. And of course, the cost and ease of incorporation. My take on it is that the best offshore jurisdictions, they strike a balance. They offer not only tax advantages, but flexibility along with legal stability and international acceptance. And unfortunately, or fortunately for some, depending on how you look at it, the top tier offshore jurisdictions are now such that they're almost basically onshore, really. In effect, you've heard about Hong Kong, so I won't propose to go through that. You've heard about Singapore. What's really striking about Singapore, that I can see at least, is that it's essentially top tier. So in my ranking, the best, if we're ranking best to worst, you're definitely going to have Singapore and Hong Kong up there. Then, controversial, BVI. But the difficulty with the BVI is that as soon as you say British Virgin Islands, that's going to raise a red flag. But the reason why I include it as one of the top tier ones is that because it's popular. And it's popular for the following reasons. So you're going to have your traditional hold company structure and your asset protection structure. And that's really it. As a trading vehicle, it's no longer as attractive because there's been a series of decisions over the years in the High Court, in the Court of Appeal, and at Privy Council that have essentially basically paralyzed shareholders and basically imposed onshore type director duties on directors. So you're going to have to exercise some discretion there. As Aaron said, yes, incorporation cost is relatively low, but in order to actually make it effective, you're going to have to consider economic substance. So you're going to have to pay perhaps a local. So you need to have a local director, maybe a local secretary, maybe a local office. Some people even go so far as entering into an arrangement whereby you have a little mini office with its own telephone line, etc. So sometimes you can have a duplication of effort just to pass the compliance burden. But notwithstanding that, even though there's a particular reputation, what the BVI government has been good at is ensuring that they pass OECD measures, they jump over the hurdles of the EU blacklisting. And every year you always hear the government come out and say, well, the BVI is fully compliant with OECD anti-money laundering standards. We're off all blacklists, etc. In terms of publicly accessible information, there is the BOST system. So what that means is that me, Charles, I can set up a BVI company, etc. But it's only government authority or certain proscribed government authorities that can have access to the ultimate beneficial ownership information. I also put the Cayman Islands as another top tier offshore jurisdiction. And I say that because it's popular with investment funds and financial firms and also hold companies. And it's very popular in the Far East. But what you usually find is that it forms part of a structure. So traditionally, whereas Cayman, BVI, St. Vincent, etc., they would just have the entire structure running. That's no longer popular, and that you're going to run into some issues there. You use the offshore company as part of a structure. Then you have your mid-shore options, and this is traditionally places like Luxembourg, Ireland, the Netherlands, and Switzerland. But I haven't had much direct experience with that. But you hear about them rarely because Switzerland, Luxembourg, people really prefer an EU adjacent type system or EU adjacent type haven, for want of a better word. And it's easier there because, well, there's a bias towards that sort of Nordic, that sort of European access to capital, etc. The UAE has emerged as a modern favorite, but the difficulty is that you can't, at least in my view, you can't really plan more than a year or two in advance because the goalposts keep moving. So at first, everyone ran from the BVI and landed in Dubai. You know, we lost loads of business, people winding up their companies in the Caribbean and landing in Dubai. And then the goalposts changed. First of all, you had difficulty getting banking and then entry, particularly into England. So in England and the EU, as soon as you say certain third countries, the term is third country status. As soon as you say a third country, automatically you're red flagged and your compliance burden jumps from regular due diligence to enhanced due diligence. And that means practically, whereas something, let's say, passing due diligence could have been like maybe 1 to 3 business days, that now moves from 1 to 3 business weeks. And then each transaction, because the profile is enhanced, every transaction is subject to more scrutiny. That's made sure. And then I just have, frankly, the worst to use. Now, from my accent, you can tell I'm from one of the smaller island havens. So I'm from St. Vincent. And St. Vincent has been infamous over the years for shipping scandals. When FATCA came out, in fact, the first prosecution on the FATCA that was successful was a Vincentian offshore structure. It was a Vincentian offshore bank. So they ran from St. Vincent to Puerto Rico, but the CEO still had to do a little bit of jail time. And he did a deal in the background to pay some money and come out of jail early. Get out, not to get out of jail free card, but to get out of jail early card. And that's typical in the sense of the reputation across most of the small island developing states. And sometimes they can be the worst choice. And generally, most people avoid those of the smaller islands. Why? The blacklisting. Every month, the goalpost changes with the EU. So there's an EU blacklist, then they have an EU grey list, and then there's an EU white list. And the practical effect of that is to raise or lower the red flagging. Now, remember earlier the criteria that I listed about ranking. In my view, it doesn't make any sense to have an offshore structure if you cannot effectively integrate with the international financial system, the regulatory oversight. So you have places like St. Lucia, you have places like Barbados, even Trinidad, some of the structures. Guyana, yes, they have oil, but they're now in the process of completely revamping their corporate law. The basic regulatory oversight, things like director duties, things like shareholder requirements, the disclosure of information, etc. You have to be very careful. So not to necessarily unfairly slate where I'm from, but sometimes you get more crooks, essentially. You just want a quickie structure. You just need the benefit of incorporation. You set up a company or LLC for $1,000 US. You get your certificate of incorporation, you get your certificate of incumbency, and you can go worldwide and trade. And you find that particularly with Forex traders, crypto bros, maybe the quick ship incorporation or ship registration. And sometimes that works for as a useful alternative to, let's say, a BVI company or a Cayman company. It offers the same transparency, but you're essentially rolling the dice. If you have your banking arrangements already set up, then fine. But it takes a lot of discernment. There used to be maybe about 20 active offshore banks across the Caribbean. That number has now been halved because compliance burden on them has just been essentially impossible. So places to avoid, you want to avoid Belize. Belize's reputation is rarely a rung below us all. So if we're ranking in the worst, definitely avoid Belize. On the flip side to that, where you do find a lot of Belize structures is art holdings. A lot of, let's say, like Russian, to avoid sanctions. You find Russian, Belarusian, that sort of CIS type of structures usually in Belize to hold in particular art and other hard or tangible assets. Places like St. Vincent, St. Lucia, St. Kitts and Nevis, you usually find stuff like offshore trusts, or you usually find like perhaps a trustee having one or two structures on the books there, maybe to hold assets that aren't really being used annually. And then, of course, you have places like Niue, Gambia, Liberia, more heavily popular for quickie shipping corporations or ship registration. Marshall Islands, but Marshall Islands has been under a lot of pressure recently. We spoke about the EU's official blacklist and blacklisting, I won't go into. Then grey listing. So usually it's like a little bit of a lottery each month. Seychelles goes on, Seychelles comes off. BVI goes on, BVI comes off. St. Vincent goes on, St. Vincent comes off. In my view, we have a hell of a time trying to stay abreast. But that being said, best, top tier, mid sure, worst, there's still a way, but you have to be willing to stand the compliance cost. If we visualize it as a spectrum, we're going to have to look at what the international standard is because it is an international playing field. At the worst end, the remnants of the old school tax havens that haven't adapted, but they find themselves increasingly blacklisted or simply bypassed by people with serious business. So you may form a company, but it's often a very hollow victory. And I think that echoes all of the speakers before. Offshore is still very much alive and continues to evolve, but you have to have people on the ground and remain responsive. I hope I've been very helpful this morning. I apologize for not having a visual presentation.
Thank you very much. Really appreciate you sharing your experience and your insights as well.